Let's talk to Craig Erlam. He is the Senior Market Analyst at very good morning to you, young Craig.
Good morning.
Right, midterm elections out of the way. The markets feel quite steady. Is this another situation whereby the bulls don't have to worry about this hurdle and we can move on to the next one?
Yeah, I think this whole blue wave, as it was being called, didn't fully materialise, which is certainly seeing some relief in the markets, this kind of collective sigh of relief, which is why we're seeing them trading higher today, nicer and in the green ahead of the open on Wall Street. I think really when we're looking at the markets right now, you judge the first 2 years of Trump's reign. He passed a number of his pro-growth, pro-market policies. We're looking at tax reforms as a massive factor of this. We're looking at deregulation. These things were taken care of in the first 2 years, so I don't think it's necessarily too disruptive, the fact that we have now a split Congress with the Democrats taking the House. I think the worst case scenario from a purely markets perspective would have been Democrats taking control of both, because that would have led to the potential prospect of a reversal of some of these policies. And I think we're looking specifically at taxes here. There's a reason why we're heading for nearly 25% year-on-year earnings growth in the US for the third quarter, for example, and tax has a massive part to play in that. If any of these policies were reversed, naturally you would see that take its toll on the markets.
Understood. Okay, we're going to cover a currency pair now. You sent a slide in earlier, the New Zealand dollar against the US dollar. You covered the Aussie last week with us, and you predicted that we could basically find some buyers, and this looks not dissimilar. This looks quite favourable now technically, doesn't it?
Yeah, these two charts do relatively mirror each other. It's not a surprise given the region where they are and the similarities in the economies themselves. We've seen a nice break higher in here, just as we did in the Australian dollar, and we've seen a nice little surge following that. Now we are just taking out levels as we go. We've taken out 67. I think the next test here is around the kind of 68, 68.50s. That's where we start to come into contact with the 50 fib from the highs to the lows. It's where we start to meet the 200, 233 day simple moving averages as well. So that's a big major test for this pair. If we are going to see a continuation of that downtrend, that would be one possible rotation point. In terms of support to the downside, I think 67 again from that previous peak would be a very logical support level. And then ultimately you're looking higher again around the kind of 70.50s, which is the 61 fib, 61.8 fib, again price support and resistance, so logical potential resistance level. But I think it's just a really interesting chart, one that's played out very nicely and been very aggressive in this corrective move as well.
Understood. Now, in terms of the currency markets, any sort of major calls into year end?
Well, I think from my perspective, I'm looking at the markets right now. I still think the dollar looks a bit overstretched. And when I look at a number of these charts, the Kiwi dollar is one, Aussie dollar is another. But we're looking at the situations with the euro and the pound as well. I think there's potential for significant upside if we find a resolution with the Italian debt situation, and even if that means the can's being kicked down the road, which offers some near-term relief, and if we see some actual progress on Brexit, and I've said many times before, I do think we are heading towards a deal of some kind, that provides some relief for the pound and probably some significant upside relief as well, given how much of a sell-off we saw in the aftermath. All of these seem to be, for me, negative for the dollar, and given that the dollar is such an overcrowded trade and we are near those peaks, from my perspective, I'm looking into year end now, and I'm wondering if we could potentially see a bit of a correction in the greenback, which would coincide potentially with a risk-driven rally. So all of these things do tend to point to the downside for the US dollar as far as I'm concerned. The question is, though, it's not always a matter of just knowing where something's going to move. It's about catching the right timing. And the problem with Brexit and the euro, for example, is, and particularly with Brexit, everything seems to happen at the 11th hour. But the question is, if a deal's going to be struck in a minute to midnight, when is midnight? And that's the most difficult thing to judge, because that's ultimately going to decide when we get that deal and when we see that significant potential upside for the pound.
On that note, Craig, thank you very much indeed. That's Craig Erlam from O&A.